Hey all, this is a quick market update video for the 3rd of December 2018. Now, we're going to start off obviously as we always do by looking at the economic calendar, then we'll go and have a look at the currency strengths, and then we'll go and have a look at the charts and see some of the setups that are appearing at the beginning of this week, looking for the week ahead. Now, this week is a very interesting week because not only do we have a number of news events, major news events, we also have news coming out over the weekend. And certainly in the US dollar pairs that we were looking at in the forecast, we've basically had a complete reversal of a number of these. So we need to actually factor that into what we're looking at and essentially see whether this reversal follows through probably for the rest of the day. I want to be a little bit careful about jumping in these dollar pairs today too early and then finding out that actually this is just a little bit of movement off the news and they resume in their overall direction to the upside. So we need to be careful about that, but there's a lot to discuss this morning. I think looking at the markets ahead for this week, one of the key things that I'm going to be looking at this week really is capital preservation, making sure that I'm not overcommitting because we just have so many things going on that the markets could get quite volatile and they could get out of line with what perhaps we're looking at. So we just want to be a bit careful on that front. But there are a number of opportunities that I think could be appearing. I've been going through it this morning and just working out the best path forwards. And I think there is a best path forwards here with the commodity currencies, which we'll come and discuss. I wanted to get this out a little bit earlier today because there's been a number of changes and things going on. So I just wanted to give you guys a heads up of exactly what I'm looking at in the markets for this week and this morning. So starting with the economic calendar, you can see that we pretty much don't have a lot of news coming out today. We have the ISM manufacturing PMI. It's an important economic indicator, but this is not something that we would expect to reverse trends or anything like this. We're going to see, I would imagine, a bit of volatility comes in. It really depends on what the outcome is. If it comes in pretty much as forecast, then generally speaking, we don't see much of a movement. If it comes out wildly divergent to the forecast, then this is when we see movements either way. But generally speaking, it tends to be short term. We're actually seeing, just on a side note, we're starting to see the ISM coming down off the peaks of 60. So with the ISM, when you're above 50, this is considered bullish for the economy, and below 50, this is actually considered bearish, or you would be looking towards a contraction in the economy. So we're actually coming down off the highs, suggests a little bit of weakening in business confidence, but you can see that still, generally speaking, overall, still pretty bullish on the US economy. Again, I don't see this causing anything other than a little bit of short-term volatility. Coming into Tuesday, we do have the first big piece of data that we have this week. This is from the RBA. Just to keep you guys updated as well, the blog on the website hasn't been updated recently just because there has been an error on the back end of the website. It means I haven't been able to upload the blog. So the web developers are working on this. So if you wondered why the blogs haven't been going up, it's just because of that. But as soon as that's done, we'll be getting those back up and you can read these statements with the highlights again. And in terms of the first piece of news this week, the big piece of news is the RBA statement coming out on Tuesday. So we just have to bear in mind that today, going into this evening, generally speaking, we would say that we might not see much movement in the Australian pairs. However, because of the news coming out over the weekend with the meeting between the US President Donald Trump and the Chinese President Xi Jinping, they came to an agreement on tariffs essentially just to kick the can down the road. I mean, there hasn't actually been an agreement in place specifically regarding what tariffs and what products are going to be agreed upon. It's more just a case of they have agreed to extend the deadline for the agreement. And the markets, I mean, I don't see an agreement actually being reached in the time they've allowed to extend it. But what the markets are looking at is, well, there's a very good chance that as they start to make progress, they may just extend the deadline again and they'll just keep extending it until the agreement is reached. So what we've seen is, because of this, we've seen a number of commodity currencies, especially because of they are obviously intrinsically linked to this ongoing trade dispute. We've seen the Canadian dollar, the Australian dollar, and certainly the New Zealand dollar all outperforming this morning based on this news. So the first thing when we have pieces of news like this coming out, we obviously want to take into account how they can move the markets. But the second thing you always want to do as well is just make sure that the technicals show this and that we actually have technical confirmation of any fundamental news or fundamental ideas, because otherwise the market can very easily discount this. And if we get involved in a number of Aussie and CAD and New Zealand pairs and the market just discounts it, then we just end up getting taken out on all of those across the board. It does look like this morning that the technicals are going to hold up. We'll come and have a look at this in a bit on the charts. So it does look like perhaps for the remainder of this week, certainly as we've seen money coming out of the US dollar, it has gone into commodity currencies which are benefiting from the trade. We'll call it a trade agreement. It's not really a trade agreement, but it's essentially an agreement to extend the deadline for the tariffs. So what we've seen here is we've seen commodity currencies, New Zealand, CAD and Aussie, and not only have they outperformed because they are linked more closely to the trade dispute being commodity currencies, but they also pay, after the US dollar, the highest interest rates, as you can see down here. So it's only natural for people taking money out of the US dollar based on this news, especially with the ongoing situation in the US where you have the US President Donald Trump essentially berating the Fed Chairman Powell for being too hawkish. So the general fundamentals here which seem to be playing into the market are a kind of preemptive move on behalf of people who have their money tied up in dollars to be taking it out of dollars and putting them into the second highest interest rate paying currencies, which also happen to be commodity currencies benefiting from this. So this is why we've seen the CAD, the New Zealand and the Aussie outperform. And because we've seen this, there's a very good chance this is going to continue for the rest of the week, and there's a very good chance that actually the best path forwards in terms of looking for profits this week, could be a tough week, but it could be a very good week as well if these continue to outperform for the rest of the week. It just means that this is probably going to be the best plan going forward for this week in terms of looking for CAD, New Zealand and potentially Aussie strength. Certainly New Zealand and Aussie strength, as we've seen these start the week strong. But again, we'll come and talk about this in more detail and look at the actual markets specifically in a bit. While we're down here, you can see the other thing this week is we do have non-farm payrolls on Friday. Generally speaking, on non-farm payrolls, we can see the markets generally moving all the way up till Friday and then pretty much doing the opposite. So you can have moves like this very often in non-farm payroll week. The market, say, could be moving down, and then on Friday you get a kind of reversal like this. So generally one good plan is to be trading in the direction you want to be trading and then being out before non-farms to avoid the potential profit taking or the reversal coming in at the end of the week. Or markets tend to do nothing. Just get rid of this. And then they can move on non-farm payroll. So it's unlikely we're going to see this week because we've already had movement in the dollar pairs. We've had movement, money coming out of the US dollar into the CAD, the New Zealand and the Aussie for reasons discussed. And not just the US dollar, we've actually seen money coming out of safe haven assets as people look to take on a little bit more risk. So we've seen some money coming out of the Swiss franc and also the Japanese yen as well. But primarily, we've seen money coming out of the US dollar because this is where a lot of the money has been in this bull run that we've had this year in the US dollar. So in terms of the rest of the week, we do have to pay attention to non-farm payrolls on Friday. But again, it looks like I'm going to be looking to be in and out of the pairs between sort of Monday and Friday. And it doesn't look like there may not be a lot of opportunities to actually get involved today. Today, being a Monday, very often is a construction day corrective. The markets get themselves into place. And it looks to me like today might actually, and again, we'll go through the charts in a bit to have a look at this, but it may be a case of waiting till tomorrow. So I might be looking towards Tuesday, Wednesday, Thursday for the markets to move. And then being out kind of Thursday evening, capturing the best part of any moves this week. And why are we discussing the moves this week? Well, because generally speaking, if you are looking to take a position this week in the market, if you're day trading, you can day trade. It's very, very tough, but there's a number of things you have to do. Certainly, you have to be trading in the direction of the volatility. But you're going to find if you're day trading, for example, you might get involved out of 5 days in the week. The market may only move one of those days or 2 of those days, and that could be the whole week's movement. So the reason we look really at a minimum to capture moves over the course of a week, if not 2 weeks or more, is because that really is the kind of minimum time frame to get the market movement, to get the volatility. Because out of those 5 days, you're probably going to have at least a couple of them moving. And if you're positioning yourself at the beginning of the week to try and capture that move in that direction, then you're going to have a lot better risk to reward than if you are trying to trade every single day. So this is why we look at the 4 hours as well, because if you're looking at the 4-hour patterns, they tend to play themselves out over the course of the week. Again, we'll come and look at this in the charts in a second. But the 4-hour time frames, when you see these patterns in the 4-hour time frames, that's generally like a weekly horizon that these tend to play out over. So even if you do want to trade on the lower time frames, you want to trade the 1 hours or the 15 minutes or whatever, that's fine, but you still need to work out your overall direction first. You still want to at least start off with the 4 hours to see where you're going, and then trade in that direction if you want to trade on the lower time frames. That's going to be your best chance of making money if you want to trade on the 15 minutes or the 1 hour. If you just trade straight from the 15 minutes or the 1 hour without looking at the bigger time frames, you're going to end up getting into choppy markets, and it's going to cost you, because when you trade on the lower time frames, you get more opportunities, and if you're taking more trades and you're in a choppy market, you're just going to churn your accounts. You have to be very, very careful. You have to make sure you're trading in the direction of the bigger move, of the overall move. And that's what we're going to be doing this morning. We're going to go and have a look and see where these overall patterns and moves are setting up in the markets for this week. So we do have the non-farm payroll data on Friday coming out of the US, but it may be overshadowed this week because after the RBA statement on Tuesday out of the Australian dollar, which is pretty much going to be one of the currencies that I'm going to be looking at, I may not be able to get involved in the Aussie pairs until sort of tomorrow morning after this news comes out. This is coming out in the Asian session. By the time I come in, I'll probably be in around 5-6 o'clock, so that will be the first chance I can look at the Aussie pairs. But if you are trading the Aussie pairs before this evening or before tomorrow morning in the Asian session when we have this RBA statement, you really should be looking, as we've discussed in previous videos, at placing your if you're trading through an RBA statement, you want to be placing your stop loss in 4 hours. And again, we'll come and look at this, exactly what this would mean on the charts. We'll look at some examples of where that could be done for this week. So we do have this. I'd expect potentially some volatility. We're not looking for a change in the interest rate. The RBA has said pretty consistently that a low Australian dollar is good for the economy, and it's helping keep the economy on track. So we're not really looking for any changes in the rhetoric, but we may see some volatility, hence why the 4-hour time frame is always a good one to use if you're trading through this. If you're not and you just want to wait till after this comes out, then that's fine. We have Carney speaking on Tuesday. Carney is actually due to testify about the Brexit withdrawal agreement, and this could have an impact on the market. This is one of those pieces of data which we could see volatility coming into the pound. So coming into Tuesday, we already have an interest rate decision out of Australia. We have the pound, which potentially could become volatile on Tuesday. And we know further down the week we have non-farm payrolls on Friday, which is mainly for the US dollar, but also affects all currencies. So you can see we're actually starting to get fundamental data linked pretty much to a lot of these currencies here. If we're coming down, we have the Australian GDP on Wednesday as well. Again, I would expect some volatility, but perhaps nothing which really reverses the trend. Again, it depends on what the number comes out as. Generally speaking, with GDP, as I said to you in the previous video, traders they tend to actually work this out based on economic indicators before it comes out. So this is why you don't see trends being reversed on GDP data, because the big money has usually already come into the market before the GDP is actually announced. So again, I expect to maybe see some volatility off this depending on what the release is, because you do get traders just trading it. Retail traders trade it, so it causes volatility. But I wouldn't look at this reversing the trend. And I would still be looking generally for perhaps a bullish Aussie as one of the best plays so far this week that I can see. In terms of the speech on Wednesday from Draghi, he's due to give this at an ECB conference, so I don't really see this as being something we need to pay attention to. The Powell speech, however, is something we need to pay attention to, and I would imagine this is more likely to cause movements in the US dollar and the US dollar pairs than the non-farm payrolls data on Friday. I see this really as being the main piece of data actually for the dollar this week. It will be interesting, considering the pressure that Powell has come under, whether he is going to stick to his hawkish rhetoric, that is to say talking up the dollar, talking up the value of the dollar, with a kind of more aggressive policy of hikes, or whether he's going to start, with the pressure he's coming under, to start, and we've already seen this slightly already from him, he's going to start talking more in a dovish tone, that is to say talking down the dollar or talking down the amount of rate hikes or the path of rate hikes, which will see the dollar weakening. So it's really something that could move the markets on Wednesday in terms of the dollar pairs. And with the weakening of the dollar, okay, and with the not just the weakening of the dollar, but with the weakening of the dollar counter to the overall trend, because if we're going to go and have a look at the dollar index in a minute, we know we started the week actually structured to the upside. If we come into Wednesday, and I mean, if we have this big piece of news on Wednesday from Powell, we have the non-farm payrolls data on Friday, and we have the dollar essentially weakening against the overall trend, it really is telling me this week that perhaps the dollar pairs are not the best place to try and find the profits. I would be more inclined, as you can see, we start to look down and we start to see essentially three, you could count it as three pieces of US data, because we've had the US news coming out over the weekend, which weakened the dollar, about the trade talks, because we had the money coming out of the safe haven assets. The US dollar is classed as a safe haven asset because of the size of the US economy. We've seen the money coming out of safe haven assets, weakening of the dollar into the commodity currencies. We then have another piece of US news on Wednesday. We have another piece of US news on Friday. So in terms of the dollar, we could be seeing a lot of different moves in the dollar this week. It may not be very helpful for us. So it really, in my mind, takes the US dollar off the table to a large extent, or at the very least, it makes it unattractive for me this week. Certainly, looking at the interest rate decisions we have none coming out of New Zealand, and we have one on Tuesday. So pretty much Tuesday, Wednesday, Thursday, possibly even into Friday, you can see already that the Aussie and the New Zealand pairs, slightly more than the CAD pairs, just because the Aussie and the New Zealand actually started the week strong. The CAD started the week bearish and has kind of reversed slightly. So the Aussie and the New Zealand are actually overall stronger than the Canadian dollar. So I would favour, and we're starting to work out the best path forwards here just based on the news and the fundamental data before we go and confirm it on the charts and actually look at where these opportunities could be. But I would favour the Aussie and the New Zealand pairs perhaps this week as being the best currencies to make money from. And caveat that slightly with trying not to overtrade this week and take too many, just in case all of these fundamental pieces of data just reverse markets or change them up or cause them to be choppy. So you can see as we go through the news, we're starting to flesh out a bit of a plan here. We also have a Canadian interest rate decision on Wednesday. So again, when we pair this with the Aussie and the New Zealand pairs, we could get involved in CAD pairs, and we could start to see some reversals in the CAD pairs on Wednesday as well. So it's just another confirming factor that the Aussie and the New Zealand currencies actually look better in my mind this week, at least. Perhaps if we get a strong showing from the CAD this week, then perhaps next week the CAD might be one that provides some really good opportunities. This week, I think, with the Aussie and New Zealand starting strong, as you would have seen in the currency strengths, they really are probably the go-to currencies that I want to look at this week's over and above the CAD pairs. So we have this piece of data on Wednesday. Again, we'll come when we look at in the charts, we can see how any CAD pairs could potentially be traded if there's anything setting up before Wednesday. But the Aussie and New Zealand pairs, certainly after we have the Aussie statement, look to be the better opportunities in my mind. We have the retail sales data coming out on Thursday again. Not really, it's red, but it's not really a massive piece of data. Might get a bit of volatility. You'd expect to see retail sales actually slightly increasing anyway in the run up to Christmas and coming into January when we have the sales. So I don't really see any major, certainly don't see any major moves coming from retail sales. The moves that might come in the Aussie, apart from the news we had over the weekend, would be on the RBA statement. And again, we'll look at exactly how these could be traded on the charts in a bit. Now, we also have the OPEC meetings coming out on Thursday. These are actually twice a year. So you can see we have a ton of data. We have to kind of navigate a little bit of a minefield here. And that's exactly what we're doing. This comes out twice a year. And we discussed in previous videos, we've just been selling this oil. And oil has really, I mean, it's just made the end of this year. It's just been fantastic. There's been so much profit to be made in oil since I can't remember when it was we started to go short, but it's just sold off and sold off and sold off and sold off. We've had some money coming into oil, which again we'll go and have a look at in the charts this morning. And we discussed in the last video that at some point this is going to end. And with the money coming into oil this morning, and with the OPEC meetings on Thursday, we could see a major snapback in oil this week, because although it's still structured to the downside and technically we're looking for shorts, we just have to be careful because we have essentially oil now sitting, or it went under $50 a barrel. I'm not sure where it is after the news this morning, but it was at under $50 a barrel. This is not good for the OPEC countries, Russia, Saudi Arabia, who actually came to an agreement of sorts over the weekend as well, which is why we saw this boost in oil. They're not going to be... They have a history actually of really failing to come to agreement on these things, but when oil is under $50 a barrel, there's a lot at risk. It's a lot easier to be blasé and not reach an agreement with each other when oil is pushing on for $80 or $70 a barrel. When it dips below 50, there's going to be much more incentive to try and reach an agreement. And if an agreement is reached which boosts oil on Thursday, all of these traders who have been shorting oil ever since the kind of $71 a barrel when we first started looking to go short, they're going to take their profits, and we are going to see a short covering rally in oil which could just explode to the upside. So that in itself is a slightly different trade, because it is counter to the overall trend, but it's because of and this is a little bit more advanced, but it's because of we don't really look to go counter the trend. We want to be trading with the trend. But if you have a fundamental piece of data which can reverse the trend, and then you have all of the traders who have been short pulling their trades off and covering their shorts, this is what causes big moves to the upside, and they can be quite severe. It doesn't mean it's definitely going to happen. I'm just showing you the kind of ways in which these long rallies, these sell-off in this case in oil, can come to an end, and how when they do come to an end, if you can correctly identify that, especially if there is a fundamental reason for this to end, which it could do on Thursday, then there are possibilities of trading those kind of snapbacks in the market. But anyway, you can see another market essentially that we're looking at this week, oil potentially to the downside as it's structured, pretty much could be off the table. I mean, this is something which in my mind there's a very good chance that this could actually reverse this trend in oil. So even with oil now, I'm slightly cautious about shorting this week. With the OPEC meetings, I think I'd probably rather wait and just you know, be a bit patient with oil. I'm not very keen in jumping into oil short this week. So again, going through all of this, oil pretty much is off the table for me. The US dollar pairs are not looking very attractive this week. It leaves the Aussie, the New Zealand, and the CAD, with the CAD interest rate bang in the middle. We'll look at some CAD pairs, but I prefer the Aussie and New Zealand because of that. So coming into Friday, you can see we pretty much covered all of the news data. It has left. This is the Powell's speech, which is due to follow the rate statement over here. Again, this can move the markets, but I imagine most of what will be said will be in the rate statement. I think we'll see Wednesday is when we'll get the reaction from the CAD pairs. This will probably pass. It's hard to say. It can move the markets, but it will probably pass uneventfully because he's going to discuss the interest rate decision, but that is going to be summarized in the rate statement anyway. So I'd be looking for this, although this can bring volatility, I would be looking for this to pass uneventfully because of those reasons. And the Chair Powell speech on Thursday, again, this is not the big market mover potentially. This on Wednesday is the speech which could move the markets for the dollar pairs. So with the dollar, basically news coming out over the weekend, news coming out again on Wednesday, and non-farm payrolls on Friday, it makes the dollar unattractive this week. As I said, you can see going through all the data, and it's taken us longer this morning than it ever usually does just because of the nature of this week, but it's better to do the work and to try and find the less risky and the better setups first, and then we can have a pretty clearer idea of what we're actually looking at this week, and we can avoid any or the majority of unexpected pieces of data. So going through all the news and everything this week, it really is setting up, based on what we're seeing in the charts, that we're seeing this sell-off coming into the dollar, and it's going into out of safe haven assets into commodity currency seems to be the theme for this week. You can see starting the week we actually had a strong dollar, strong Aussie, strong New Zealand, but I would be wary now, certainly today, about going long the dollar because of this news. But I would also be slightly wary about going short the dollar today, just because I want to see how the day finishes now, because I've seen very often you can get these moves on, overnight, weekend gaps, and then it just reverses, and by the time you finish the day, the market has just eaten up everything that it sold off, and it continues in the original direction. So not only today, but as I said, for maybe the rest of the week, I'm going to be cautious of the US dollar pairs. It leaves certainly the Aussie and New Zealand, which are the two pairs this week, I think, going to be the best. So in terms of the Aussie and New Zealand pairs, certainly I would be looking this morning, perhaps we could look towards Aussie CAD, Aussie Franc, Pound Aussie, Euro Aussie, and also Euro New Zealand, Pound New Zealand, New Zealand Franc, and New Zealand, not New Zealand CAD. Okay, sorry, let me rephrase that. So because we started the week with the week actually finished, this was on the bearish side, but we've had this money coming into the Canadian dollar, haven't we? So looking this morning, let me just rephrase that. So Aussie and New Zealand against these three primarily, and potentially the Japanese yen, but I'm not going to be looking at trading that today. I'd have to see the yen turn weak. If the yen turns weak, then that's when I'll start again looking at getting involved in the Aussie yen, New Zealand yen, okay, to the upside. But what we will do is, even though this morning I'm not going to be looking at trading Aussie yen and New Zealand yen, we can look at Aussie and New Zealand pairs against the yen, because it's a safe haven asset, in the anticipation that if we do continue this, then we might see this turning weak as a safe haven asset, and also the euro, the pound, and the franc. Okay, so pretty much we can look at 8 currencies this morning that I think are going to provide the best opportunities for the week. These ones here. So let's go and start by looking first of all at the US dollar. We have broken back down below the 96.39 in the US dollar, and again, there's every chance we could end up. There's every chance we could end up doing something like this. This is why you need to be careful. We sold off, we gapped down here, and we've come down and we've sort of bounced here. But there's every chance we could end up doing something like this before the end of the day, and then we just end up back in the same position. Okay, so we need to be very, very careful about this. If we get involved, for example, in short dollar pairs, and this just reverses up like this, then we're going to basically end up getting stopped out on these. So if you are looking at the dollar pairs, I would say at the very least, let's see how this finishes today. Okay, if this comes back up like this, then we're still going to be looking at the market being structured for something like this. Okay, whether we want to trade it or not because of the news on Wednesday and non-farm payrolls on Friday is a different scenario. But if you are looking at trading the dollar pairs, I would at least give it today to see what happens. If we finish up in this area, we're still looking towards the upside. If we get a sell-off down here, and we start to see momentum coming into the market to the downside, and we discuss exactly how you can do that, you know, in the TFT course, you know that we get this kind of move, we can look for the specific rules to see if we have momentum coming in. This is when we would start to look for a kind of reversal in the dollar index, and this would be when we would start to see the weakening in the dollar back down to here, and we would class this as a big, perhaps a big A, B, C like this. Okay, but certainly the move between here and here is what we'd be looking at. So the dollar is kind of patience is required in the dollar. So although it is bullish going into this morning, my advice would be just to wait and see how this sits at the end of the day if you are looking at trading it. But you can see clearly, as opposed to being having any clarity around it, it's kind of just crisscrossing the 96.89, and it still hasn't even really sold off in any real sense below this level. So again, patience I think required is the smartest move on the dollar. Certainly I won't be looking at trading it myself for the time being. If we come down and have a look at oil, you see what I was talking about before we move on to the Aussie and New Zealand pairs. We are still structured to the downside, and again, technically speaking, yes, we'd be looking perhaps for something like this, okay, and maybe this would be an A, B, and then 1, 2, 3, 4, 5 would be an A, B, C, and then this move down here. But with oil currently as it is, $50 a barrel here, and the OPEC meeting on Thursday, we run the risk of this happening. I would not be surprised if this happens. Okay, it does something like this, and then we get a big rally as the OPEC countries meet, and they come to some form of agreement, perhaps to boost the price of oil. So oil is off the table as well for the time being, at the very least. I see oil as being very risky, but I just wanted to show you exactly what I was talking about. We had the money coming in this morning. So let's go and have a look at the pairs that do potentially be looking to offer the best opportunity. So let's start with the Australian pairs, and I'll be looking at Aussie yen, Euro, Aussie, Pound, Franc, and Yen. Okay, so let's start with the Aussie pairs. Let's go to Aussie Yen. So Aussie Yen, we're coming very close to the first target to the upside. You can see we have got momentum coming into the Australian dollar. The Australian dollar against Japanese yen. When you have a gap up like this, you have to just imagine this as a single candle. Okay, when you have a gap, just imagine this as one candle like this. Okay, that's pretty much what you're looking at. So we would still be expecting perhaps a bit of a reversal down into this area before continuation to the upside, taking out this target, and then perhaps a second target to the upside as well. Now, when we're looking at these levels, something else just to note when we're looking at these levels are, although it may seem like this to some people, these levels are not just thrown onto these charts. They are picked very carefully, and they show us a number of different things. So the first thing they, of course, show us are the key levels of support and resistance. So we know that there is a key area of resistance to the upside at the 83.93. And the second thing they show us is the overall trend direction. So we can see if we're trading Aussie yen to the upside, we're actually trading in the direction of the overall trend, because the key areas of support down here are in black, and the key areas of resistance are in green. So it's showing us that these key areas of resistance in line with the overall trend to the upside are the next likely to be taken out. Okay, if we reverse back down below the 82.53, which is the nearest support, that's when we would start to look for these as targets to the downside. But for the time being, the overall market is trending to the upside. That these green levels tell us that the overall market is trending to the upside. So we're actually looking at trading in line with the overall trend based on everything we're looking at. Okay, and not because we're trading in line with the trend, but because we've gone through the news, we're looking at the patterns now, and it just so happens to also be in line with the trend. So these are the rules that we go through, the guidelines that we go through in the TFT course for you that show you how to filter these out and to look for the higher probability opportunities. So certainly in the Aussie yen, I would be looking for something like this. And another thing that these show you as well is they show you, generally speaking, the weekly range. Okay, because when we place these levels on here, you can see we do not have tons and tons of levels all the way on the charts. So what they're showing you is that this is the likely outer target for the rest of the week. So it's unlikely statistically, based on the volatility of the Aussie yen historically, that we're going to start trading much above the 84.50. Okay, once we get above the 84.50, we're probably not going to move very fast. So if we break above the 84.50, that's probably it for the week. So what it shows us is if we're looking to trade the Aussie yen, what we can expect, all things considered, if we're trading in the direction of the overall trend, we have a pattern here already based on the rules we outlined in TFT course, and some of you may already be able to spot this anyway. We have momentum coming into the market. We need to wait for a correction, okay, because this is what allows us to get involved in the market. This is where we would be looking if you are trading the 4 hours and you have, for example, the interest rate decision. This is where we'd be looking to place the stop, okay, and be looking up towards the first target here. The risk reward would not really be good enough, okay, because this would be less than 1-to-1. But certainly if we were looking up towards the outer target for the rest of the week, or some of the sub targets that we go through, you can also use Fibonacci targets, for example, which we cover in the TFT course. But any of those around this as an upper boundary of the 84.50, which is the ultimate target we'd be looking at, this is essentially the move we'd be looking at this week. So you can see, when we're looking at the 4-hour chart, the reason we start here is because this move, perhaps from the 83.30 up towards the 84.50, this is pretty much the best we can expect this week, because that is the overall range of the Aussie yen. It's not likely to actually be going all the way up to the 85.20. Can it do it? It can do it, but statistically speaking, we're probably only going to move, if this continues to the upside, we're probably only going to be moving towards this area and this area. This is pretty much the best you can hope for in a given week. So we're really kind of honing down to the movement that we can be expecting this week, because when we understand the potential movement we may have this week in a given currency, then we can look to trade it. Because if you want to trade it, for example, in the 4 hours, as we cover in TFT course, you can. Okay, we'll be looking, if you've got the interest rate decision on Tuesday, and we're looking, I'm not saying trade this because the actual currency strengths are not actually showing us to trade this just yet. But if you were trading this one, okay, then this is where you'd be looking to place your stop with the interest rate decision, because if it gets a bit volatile, at the very least, this is likely to hold unless there's a reversal. Okay, so we'd be looking down in this area. And we'll go through the rest of the pairs as well. So if we're kind of assessing this as the potential movement this week, okay, a pullback maybe to the 83.25 and then a rally towards, let's say, the 84.20 or the 84.50, then this is either to be traded, you can trade this in one move, or you can trade it, let's say you have the rally up like this, price pulls back, okay, if you know that this is the kind of move we're looking for potentially, let's say the 83.20 to the 84.50, it's not going to move in a straight line, okay, it's probably going to be doing something like this. You'll probably tag the 83.93, and then it's going to probably start doing something like this. So this is where it comes into play if you want to start trading in the lower time frames. You first of all have to understand the potential movement in the currency that week. Okay, what realistically can we expect to capture this week? Okay, there's no point trying to trade the Aussie yen from 83.20 all the way up to 90. Okay, because it's just not going to happen this week. So you first of all have to identify what kind of movement we're going to have this week. This is why we set the levels up as we do with the outer range, and also why we go through the 4-hour time frame, because this 4-hour move, the completion of this bull flag to the upside in the Aussie yen, that is likely to take place over the next week. Okay, and it doesn't necessarily happen bit by bit. You might find that 2 or 3 of the days the market moves, or even 1 of the days or 2 of the days it moves, and the rest it's kind of flat. But this is what we'd be looking for in the Aussie yen, this move here between the 83.20 and the 84.40, and whatever we can get out of this. And when you're really experienced, what you'll find you're doing is this. Okay, price will pull back. You'll find when you're proficient that you can get involved in an entry down in this area, and then price will start to break out, and you will be able to trade the smaller moves up as well. You can move your stop loss up like this as it goes. And then what happens is you end up with, let's say the first position you take, you're risking 1x. X is a percentage of your account. So it could be 0.5%, it could be 1/3%, it could be 1%, it could be 2%, whatever you like. I wouldn't recommend trading 2%. I wouldn't even recommend really trading 1%. I would recommend trading less than that and diversifying across correlated markets. That just diversifies your risk. We cover all this TFT course. I'm not going to go through this now. But if you are trading, let's just say for argument's sake 1%, you get involved in the first trade down here. Okay, maybe you take a limit order, technical stop down in this area. And as this moves up, you just simply move your stop loss up, and this risk then moves to about 0.3x. And we were doing, this is the exact same setups we were taking all throughout this year in the live trading rooms. When we were doing live trading rooms, that we had there was FCA regulated brokerage was working for in the City of London, and we had the clients coming in and we were trading these exact setups. So this, what I'm talking about here, for all of the traders that are subscribers here and who were in the live rooms, you'll know exactly what I'm talking about in terms of adding to position, moving the stop loss up. This is the exact same setup we were doing week in, week out in the live rooms. So you can just simply move your stop loss up, and then you can take the smaller positions, either 1 or 2, up to the total target. This comes with time, okay? So the first thing you need to do, you need to learn how to take the initial position. And then once you're very, very good and you're making money, okay, with the initial positions like this, that's when you can start to once you get a breakout, say of a counter trend line, you simply drop down onto the lower time frames, and it's just the same setup. It's just the same setup, because you will see a big bull flag like this, pulls back, and when it breaks out, one movement to the upside, let's say from the 83.20 to the 84.50, will just be multiple bull flags like this, and you can trade these all the way up to the overall target. Okay, but you take your overall view in the bigger time frame, or at least from the 4 hours, so you know the direction of travel and you know where roughly the journey may end. So Aussie yen, certainly, as I said, it doesn't have to be today because we have the interest rate decision tomorrow. And let's just say, for example, you can always do this. If you're looking for a pullback into this area, there's also nothing wrong with, instead of taking an initial position, there is nothing wrong with waiting for price to pull back and then just trading these smaller moves to the upside, but again making sure you know where the overall target is from the 4 hours first, so you don't, if the target is here for example and you get a bull flag like this, you will filter this one out because you could end up with something like this. Okay, now what we're also going to do next Monday, guys, is next Monday we're going to do you'll all get an email about it this week. We're actually going to do a live session on Monday. So all things considered, I need to make sure the room is all functioning. We'll set up a live room. You guys can come in. We can discuss the markets on the Monday morning, and any questions you guys might have. For those of you who have got the TFT course, any questions you might have, I'll be happy to answer those. I'll be happy to discuss the outlook for the week. If any of you have any ideas, we can run through those ideas. and we can see next week how the market's setting up on Monday. We'll do it in a live session, so you guys can ask me questions, and we can, any questions you have, I can get answered for you. So hopefully that will help you guys as well. Hopefully you'll enjoy that. We can potentially, we'll see how it goes. We could do it with a view to doing more live sessions as we go. But let's get this one on Monday, and all of you will get an email about that. It will probably be before the London session. So if you're based in the US or maybe in Australia and you can't attend, don't worry, because we'll put the recording up in the market update video, so you can just simply watch it back, so you won't miss out on the room on Monday. Okay. So that's the Australian dollar. So we've gone through quite a bit there in terms of the structure. If this is a bit confusing to you, it might just be because this is the kind of stuff we discuss in the TFT course. So this really, I'm talking specifically to those traders here who have got the course. I know those quite a number of you trade these with your own style. That's fine. That's absolutely fine. But that is predominantly as well for those who have the TFT course, just explain it in a little bit more detail. So the Aussie yen, I would be looking at something like this. Okay, we're not going to take as much time on the other ones, but we'll look at the structure. So I would imagine this is probably the kind of move I'll be looking at capturing this week in the Aussie yen if the currency strength set up, or we get the opportunity to do so. Let's go and have a look at the Euro Aussie. So we need a bit of a correction in the Aussie yen first. Euro Aussie. So Euro Aussie, we've actually gapped down and we've taken out this target to the downside in Euro Aussie already. So not really tradable, certainly for me, because I was asleep when this took place anyway. But what we can do is, and if you take out a target, guys, you can always do this. Okay, you can just simply do this to show that this is now out the way and this is the next target to the downside. Okay. Again, as we covered in the previous video, I think it was in the last market update video, when we take out these targets, very often what you can expect is a bit of a reversal. Okay, so we're looking, generally speaking, to take profits at the target. Okay, as profit taking comes in, we get a bit of a reversal. What we do not do, we do not buy support. Okay, because we're in a downtrend. If you're buying support in a downtrend, as we discussed many times, you're just going to end up being stopped out over and over again because you're trading against the trend. And while everyone else is taking profits, you are buying into a downtrend. This is exactly what you can see momentum has come in here to the downside. So this is like an arrow, okay? When we have this momentum, it's like an arrow. It's pointing us in the direction of travel. It's telling us you want to be going short here, okay? Because statistically speaking, this is where the money is. This is where the market is telling you it's going. So we want to be finding an opportunity to actually get involved in this direction. So in a similar way, we were looking at the Aussie yen. We'd just very simply be looking for a bit of profit taking to come in down here. Perhaps we come back up and close the gap like this, and then this would be the next opportunity that I would be looking at to the downside. And again, you can see in terms of the move this week, this is the ideal move. Now, we don't always get this every week, of course, because the markets don't move perfectly every week. But this is what we can kind of preempt in the Euro Aussie. This will probably take all week, and it will probably do something like this if it does get all the way down there. Probably be something more like this. But overall, this is the kind of move that I would be looking for down towards as an outer target of the 1.5275. Okay, so Euro Aussie to the downside looks to be setting up nicely. You can see that we also have on the Aussie yen, which we've looked at, and the Euro Aussie, both of these are confirmed with momentum to the downside. So we should be looking to trade these to the downside, all things considered. Let's go and have a look at the Aussie, the Pound Aussie. Pound Aussie. So we've also taken out the target to the downside. Again, not tradable. Certainly not for me, because this was just a gap down, and this was in the Asian session. So I would be now looking for, again, some profit taking to come in. Perhaps we come down and close the gap around the 7421 area, okay, before further declines to the downside like this. And again, we'll be looking down towards, we've got some sub targets. You have some Fibonacci targets down in this area if you want to stick strictly to risk to reward ratios covered in the TFT course, or once you get more experience again and you're more confident, then you can start to look for the bigger targets to the downside, because we would be expecting at some point, whether it's this week or not, the 1.70980. Okay, if you're taking Fibonacci targets and you know how to trade Fibonacci, you can end up with something like this. So you can end up with a trade here, for example, then price pulls back, and then you have a secondary trade, and so you can actually get two trades all the way down to the overall target. Okay, so there is also merit in taking Fibonacci targets if you want, and again, if you want to learn how to do that, you can do it in the TFT course. We put it for $49, so everyone who wants to learn this stuff can do it. But you can see that you could take maybe two trades out of this all the way down to the overall destination of the 1.7098. But the third thing we can see here, or the third market that we're looking at here, the pound Aussie, again, it's showing us that we have good momentum to the downside, so we should only be looking for further declines in the pound Aussie. So what this means is that the news data that we had coming out and the initial reaction we've seen where money's coming out of the US dollar into the commodity currencies, this is showing us on a technical, it's confirming this technically for us, because we're seeing momentum, we're seeing this hold up to the downside, we're not seeing this whip back. So again, pound Aussie is one that I would certainly be looking at. This could be the move that we're looking at this week to the downside. With the Aussie pairs, there is the risk that we get this in the overnight session. Okay, so there is the risk that we get the pullback on the data that comes out, the RBA statement, and this whips up, and then we get the sell-off like this down into these areas here. Okay, so just bear that in mind. And again, when we talk about the 4 hours, this is the last 4 hour swing point up here. So this, if you were trading, and again, I'm not telling you to trade the news. Some people like to trade news events. Some people like to wait till afterwards and just trade, as I say, the smaller moves. Okay, all the way down like this. It's entirely up to you. Some people trade both. You can trade an initial position and then add to it as it goes down as well. So there's different options on the table. It's for you guys to decide exactly how you're going to pull the trigger on your own accounts, but I'm showing you what I'm personally looking at this week. All of this in line with risk management as well, of course. Okay, we're going to be looking at 8 currency pairs, and they're going to be New Zealand and Aussie dollar based. If the Aussie dollar and the New Zealand dollar, for whatever reason, reversed, and you had, say, 2% on 8 currencies, you're going to lose 16% of your account pretty much in 1 week, which is unacceptable, really, if you're going to be trading longer term. So just bear in mind, these are all correlated markets. Okay, if you trade a large portion of your account on 8 correlated markets, so 4 in the New Zealand and 4 in the Aussie, and it reverses on you, you're going to take losses. Okay, and you have to accept that that is not something you want to be doing if you want to stay in the game for longer term. So the way that I would be looking to, if you wanted to trade 8 currencies and you have a position, let's say you don't risk any more than 2% at any given time, okay, then all you simply do, you just divide that by 8. So you can just simply say, okay, what I would do then is I would take 0.25% on each of the Aussie pairs. Okay, that will give me a 1% exposure, and I'll take 0.25% risk on all of the New Zealand pairs. If you want to trade 8, you don't have to trade 8, but if you do, then that's what you do. And then what happens is if for some reason, and this happens in trading, if for some reason it all reverses on you, you're only down 2%. You haven't lost 16% of your account because you're under the illusion that you're taking 8 different trades when really you're taking 2 trades. You're trading Aussie strength and you're trading New Zealand strength. So you're trading 2 trades. So if you take 2% on each Aussie market, what you're doing is you're placing 2, 4, 6, 8% on the Aussie dollar going up. If Aussie dollar reverses, you lose 8%. So you're over trading. This happens a lot. And this is why we cover the correlated markets and the risk management in the course. So everybody who's got that, you will know exactly what we're talking about. So just bear in mind, all of this is done with risk management, and always make sure your risk management is sensible, especially in markets like this week, which could be a bit tricky. So we'll see how it plays out. But certainly the Aussie and New Zealand are looking the best to me. Let's go and have a look at the Aussie franc. So all of these are showing momentum to the downside. We've got a little bit of a bounce here. All of them are showing the same thing, as you can see, which is that we have momentum in the direction of the overall trend, and we pretty much need a correction in order to get involved in that direction. Aussie franc. So Aussie franc, we've already taken out the first target. Again, we're kind of working our way to the upside. So what we'd probably need is we'd probably want to see, in order to get involved in these, and it just requires patience, we probably want to see the RBA coming out and pushing this down. That would be great, because you can see from here to here, we have a strong momentum wave to the upside. So again, for the rest of the week, I see perhaps best case scenario, Aussie franc, we're pulling back maybe to the 0.7320. Perhaps we fill the gap down here. And then this would be the move I'd be looking at this week. Okay, again, can be traded lower time frames if you wish, but the actual movement this week, ideally, would be this. Okay, this is where I'd be looking for the profit to come in the Aussie dollar. And it fits all the criteria. We're trading above 0.7242. So we're trading in the line of the overall direction. We have already taken out one target. We have a pattern here to the upside. And we have, in terms of the currency strengths, you can see the Aussie franc, the pound Aussie, and the euro pound, unlike the Aussie yen, are all currently viable opportunities to get involved with because they are bullish to bearish currencies. Okay, so for the time being, I'd probably avoid Aussie yen. I'd like to see yen turn bearish before I look at Aussie and New Zealand yen. But certainly euro pound and the franc against the Aussie, those ones we've just covered, these are the best opportunities that I see this week. These are the ones, at least for now, that in my mind provide the best chance. Okay, and they're not guarantees, but they provide the best chance of this move here. If we can preempt this move here, then we can make money this week, okay, and we can make profits. So that's the Aussie pairs. Let's go and have a look at the New Zealand pairs, and it's a little bit of a longer video this week, but when the homework needs to be done, it needs to be done. So I'd rather do this stuff properly. New Zealand dollar, we have a similar kind of scenario. We've taken out the first target to the upside. New Zealand yen, taking out the first target to the upside. We do have momentum to the upside as well. So again, I would just be looking at a correction to take place in the New Zealand yen. Again, just bear in mind, I'm not talking about this today because the yen is kind of bullish to neutral. So I'd like to see the yen turn bearish first. And then if we get this kind of a pullback into this area, this would be the move that I would be looking up into here. Okay. So just put that in the blue because I know some people watch this back on their smartphones or something and they can't see the line. So this is the kind of opportunity I'd be looking at in New Zealand yen. And again, it's important to understand that you pretty much only get these one moves when you come to the 4-hour time frame. Each week, you're only really looking for this move. Okay, if you're looking for this in the 4-hour time frame, then you're looking for something which is virtually impossible to happen because it just doesn't move that much. So you're not going to get 3 opportunities for the New Zealand yen in the 4-hour time frame in a week. You're looking for that one move. Okay, you're looking to try and predict the direction of the market this week. And the direction of the market this week is this. And if we can get, as predicted, okay, so not guaranteed, but as we're looking to predict all things considered, okay, when we put everything together with the news and the technicals, and this pullback is what gives us the chance to actually try and capture this movement this week up towards, say, the 79.15. Okay, that would be the opportunity. And again, there's nothing wrong with just counter trending this and trading smaller movements as well once you have the overall direction. So that's the New Zealand yen. Again, I'm not looking to trade it right now because the yen is kind of bullish to neutral, but this is the move I would expect this week. In terms of the, let's go and have a look now at the New Zealand Euro New Zealand. Euro New Zealand is one that straight away I would be looking towards. Why? Because the euro is bearish, the New Zealand is strong. Again, this fits all the criteria that we're looking for when we're looking for these patterns, and which we go through the kind of guidelines that we're looking at, and we cover in the TFT course shows you how to identify these best opportunities. And this is why the whole point of what we're doing here is when we look at the whole point of taking strong versus weak currencies is because they will tell you at a glance which patterns are setting up the nicest. Okay, so when we have a strong versus weak currency, a euro and a New Zealand, we know that the euro is weak and the New Zealand is strong, so we should be seeing momentum come into the downside. So we don't have to troll through 60 markets trying to find the best bear flag. All we do is we look at the currency strengths on a Monday morning, because the work has already been done for us, and we can see straight away, without even looking at the chart, there should be a bear flag forming in the Euro New Zealand. There should be a bear flag forming in the pound New Zealand to the downside. There should be some kind of bearish pattern in the franc, New Zealand franc to the downside. Sorry, to the upside in this case, because it's New Zealand franc. Okay, New Zealand is the primary currency in that one, and the franc is the quote currency. So this is a snapshot. It tells you where to look. Okay, this is telling us where to look on the charts for the highest probability patterns. And you get all of these. You click on the trading dashboard spreadsheet. You can download the Excel spreadsheet. It gives you all the patterns that are tradable. If you want the exact entries and the stops and everything, because you don't have your own one, that's what we do in the course. But if you just want to see the patterns, you can download that, and you can see straight away this is where the momentum is. This is where the opportunity is. So we don't have to click through all our charts. Okay, we just simply come and we look at this, and it's telling us these are the opportunities we should be looking at. Okay, the best opportunities for the potential moves this week, at least for the time being. So again, we come to the Euro New Zealand. What do we see? We see that the confirmation in the technicals that yes, the euro is a lot weaker than New Zealand. We have momentum to the downside. It's pointing us to the downside. It's telling us we should be looking at trading this to the downside. Do we want to get involved here? No, because there's a good chance that some profit taking can come in. Okay, and what happens very often, and a lot of the traders that I've trained, especially new traders, one of the biggest mistakes is price move to the downside, they short here. Price comes back, they get stopped out. Price moves down, they go short again. Price moves back, they get stopped out. Price moves down, they go short again. Price moves back and they get stopped out. So they're constantly being stopped out even though they have the direction correct. So as professional traders, what you want to do is you have to wait. You have to be patient and allow the market to come back and give you your opportunity. Okay, and then you can see that, okay, well, if this is the overall direction of the trend, what do we need? We need a correction. Okay, and then we're going to be looking for the next momentum wave. Why? Because the market moves in waves. Momentum wave, momentum wave, okay, momentum wave, momentum wave. So if we have this, we need to wait for this. Why? Because this is what we want to trade, this bit here, the next wave down. We don't want to trade the correction. The correction is the opportunity to trade the next wave coming. Wave. Correction, wave. So we're looking for a correction because we want to trade the wave. Okay, the impulse waves, this, mark my words guys, trading impulse waves is what professional traders are doing all the time. They're not looking to get involved in short, maybe they take a few C wave trades, but it's still the impulsive wave within the C wave. Okay, so when you're looking to make money, the best opportunities to make money come between the corrections. Okay, so you want the correction first to trade the next impulse wave. So again, I would see that in terms of making money this week, I would like to see a pullback in the Euro New Zealand somewhere up into this area, and this would provide the opportunity. What happens if we get a pullback and a retest of the key area of support? Well, it's very simple. We just wait as we go through in the course. We need to wait for the pattern. So it comes back up, say you get stopped out. Okay, then what? Well, what you need to do is you can put a trend line back on here if you want, or a channel or something. I'm not a massive fan of channels because they just confuse things. But say price comes back up like this, what do? Well, you just wait for the same thing. Okay, you wait for another momentum wave to the downside, and then you can look at getting involved again down here. So if it happens, you just simply do two things. You either take the loss, okay, and then you wait for another opportunity either like this, or you wait for an opportunity back in the same direction like this. Okay, you just simply wait for this to fall. So that's what I'm looking for in the Euro New Zealand. Again, I'll wait for a little bit of a correction. And I'd be looking for this as a high probability move to the downside, all things considered. Okay, down towards the 62.47. And again, you may decide to take this in stages. Okay, you might find that there's two trades all the way down, or you might just want to hold it all the way down. It's entirely up to you guys how you manage your account. As long as you are sticking to good money management and good risk to reward, that's fine. Let's go and have a look at the Pound New Zealand and New Zealand franc. Pound New Zealand, I would expect to see the same sort of thing. We haven't actually taken out the target to the downside yet. You can see we are forming a bear flag to the downside. I would again expect to pull back somewhere into this area and a move down. Can we get a pullback to the 86949? Yes, we can. Okay, because we always say that actually preferably we would like to see a pullback into this area, but we're always prepared to trade in the direction of the trend if we don't get a pullback. And as I just said, if we do get that pullback and you take a loss, it's probably just because we're pulling back to retest it. So all we need to do is just wait for the same scenario to unfold. You know, it's actually very simple trading, isn't it? I mean, for those, if you've done the TFT course and you see these basic patterns, it's very, very simple. You just need patience to wait for them to appear. And you just need to be trading in the overall direction. So I see in the Pound New Zealand as well, it's already setting up for a potential decline to the downside. I would probably, if I was looking at trades this morning, it would be the New Zealand pairs I would favour, just because of the fact that we don't have an interest rate decision. So New Zealand against the Euro, the Pound and the Franc would be the three that I would be favouring today. And possibly, you know, if you're trading in the 4 hours and you're placing a technical stop in the 4 hours for the RBA rate statement and the interest rate decision this evening or in the Asian session, then Euro Pound, Euro Aussie, Pound Aussie and Franc Aussie would also be on the table. So those 6 are the trades that I would be looking at today. Let's go and finally look at New Zealand Franc. And New Zealand Franc has taken out the target to the upside. So again, do we have momentum here to the upside? Yes, we definitely do. Okay, we have a really nice push to the upside. So we have a momentum wave coming into the markets. We know we're looking now up to the 69.33. Are we going to buy this here? Probably not a good idea. I'd prefer to see a correction first. And then this would be the move I would be looking at this week. Okay, this move here. Okay, so pretty straightforward stuff really. It just takes a little bit of consideration going through the economic news first to filter out the markets that could become very choppy. The US dollar this week, all things considered, as I said before, is probably looking the most kind of, it could be the worst currency to trade just because it could do all kinds of things with the different economic data coming out. We have a pretty smooth ride in the Aussie and the New Zealand, which is great because they're also very strong. So these are the pairs that I would be looking at this week. So that's what I'm looking at, guys. All things considered, I would be looking at the movements, the highest probability movements this week being in those pairs that have been identified, certainly in the 6 for the time being, which are not looking at the Japanese yen. So it just simply requires some patience, wait for a pullback, and then these moves to the upside. This is the plan that I have for this week. You guys, of course, free to trade as you so wish, but these are the moves that I'm anticipating in advance. These are the ones that I'm going to try and profit from this week. And we may not get these exact moves in all of the currencies we've looked at. Maybe we get the opportunity to get involved and we can get an entry in a couple of them. It doesn't matter. You only need to be involved in a couple of pairs to make good money each week. In fact, you might be surprised to know that throughout my career of trading, which is coming up to nearly 8 years now, without fail, almost inevitably, the worst weeks that I have the most trades. The best weeks that I usually have the fewest amount of trades. I don't know exactly why that is. Probably because if you get involved in a position, the market doesn't move, and say you take a loss and then you get involved again, it might just be a corrective market. But it's just a fact that for me, anytime I've been involved in the markets and had lots and lots of positions, it's almost inevitably resulted in either losses or small profits. And when I have less positions, these have been some of the biggest weeks that I've ever had on just 3 or 4 trades, and they all go to target, and you get maybe you're risking say 0.5% or 1%, you get 1% or 2% on each, and you can put 4 to 8% on your account in a single week. And if you're managing your risk properly with only a small amount of risk, because if you're trading 4 pairs and you risk 1%, 0.5%, you're only risking say 2% overall, okay, on 4 pairs. And then you're looking for a target which is double that, so you can put 4% in your account very easily. If you get 3 to 1 trade, then you can very easily put, even more on there. So it's really about trying to find the moves and positioning for those moves, as opposed to just trading tons and tons of things. Generally speaking, less is more from my experience. But again, you guys are free to trade as you so wish. So with that, guys, you know what the plan is for me this week. If anything major changes, then my plan will change also. To summarize, I'll be looking for the Aussie and New Zealand pairs primarily against the bearish currencies, and I'll be looking probably at avoiding the US dollar and oil because of the big news events this week. And that's pretty much it. So with that, guys, I hope you all have a fantastic week. We'll see how these develop. This is the plan that I have for this week, and I will see you in the next market update video, either this week if there's any major changes, or if not, don't forget we will be doing a live session on Monday next week. We'll be opening a live room. You can come in and ask me questions. We can discuss any problems that you might have with your trading, any questions you have, and anyone who's bought the TFT course as well. If you have any questions, we can try and get those ironed out for you to make sure that you are trading profitably. Okay. So with that, guys, keep an eye out for the email that will all be going out to let people know when the time is. If you can't attend, don't worry, because it will go up in the market update video as a recording on Monday as well. So with that, guys, I hope you have a fantastic week. Apologies for the very long video this morning, but there was a lot to be covered. But I think we finally got to the bottom of where the better market opportunities look this week, at least in my opinion, as far as I can see. Okay, so take care, guys. I'll see you all soon. Bye for now.